Today we're going to talk about Xero or ASX XRO. This company is all about providing cloud-based accounting solutions to businesses small and large in a simple and digital way, and this company is actually one of the largest tech companies listed on the ASX at a market cap of around 22 billion, although it's founded and headquartered in New Zealand. Hey guys, my name is Faizy and this channel is about finance and investing, and in this video we're going to discuss this company's recent share price, some announcements so far, what the company does, its financials, and my personal opinion on the stock. Before we begin, this video is not financial advice. I'm not a financial advisor. Please do some research before investing in the company. This is not a buy recommendation at all. I just have a passion for investing in finance, same as you, so let's get into it. Starting off with the company's share price, we can see that it finished the trade on Friday at 147.14 cents. But if we zoom out of this graph all the way, we can see that most of the price growth has only really happened in the last 2.5 years in this period. And this share price graph kind of mimics Afterpay's share price graph as well in a lot of ways. Because after the sell-off in March 2020, we saw this stock hit an all-time high in just a matter of months, and the stock crossed the $150 mark in December to finish off its insane year. And looking at the share price graph now, it does seem to be on an uptrend, so there's definitely still a lot of excitement surrounding the stock. So let's have a look at some recent announcements around the company. So on the 4th of March, Xero announced that they're going to be acquiring a workforce management platform called Planday. Now this is a European company that specializes in employee scheduling, so when it comes to managing the employees' tasks and availability, this software is able to help, and they currently have around 350,000 users, and the whole rationale for acquiring this company was Xero's priority in helping out small businesses. So since this company helps out with scheduling employees, especially for small businesses, it makes sense for Xero to go ahead with the acquisition because it'll help its customers save time, money, energy, and other benefits as well. And Planday's offering can be easily integrated into Xero's accounting solutions, so the synergies are definitely there, given that they're both SaaS companies. Then in the same month, just 20 days later, they made another announcement to acquire Tickstar, who specializes in electronic invoicing or e-invoicing. This is another European company that operates in markets around the world, and through this, Xero will be able to leverage Tickstar's technology to help its customers by making the process more digital. And once again, this makes sense for Xero because its customers send invoices all the time, and since Tickstar is another cloud-based business, it's going to be pretty easy to integrate them into Xero's already existing framework. And finally, on the 1st of April, it was announced that Xero had completed acquisition of both Planday and Tickstar, which is going to allow Xero to keep on growing. So let's have a look at a quick overview of this company. So looking at a quick snapshot of their results, we can see some amazing numbers already where they've gained around 400,000 subscribers, and this figure includes users from not just Australia, but the rest of the world as well, as Xero is a true global company, and the annualized monthly recurring revenue, or the AMRR, has gotten some nice growth of around 15%, and we're seeing some amazing numbers in EBITDA and free cash flow as well, which just shows how much they're growing. Now, as we mentioned before when we talked about the company's recent announcement, Xero's main priority is to make it easier for small businesses, especially when it comes to providing them with a solution. And that's why we saw the 2 acquisition announcements recently, because those 2 are really going to allow Xero to serve its customers well and help out these businesses because it's in line with their priorities and strategies. The other 2 priorities are to drive cloud accounting, and we're seeing that already as Xero rapidly grows its subscriptions internationally. And lastly, build for scale and innovation, and that's through building out their technology in a way where it can basically be deployed in any country globally, allowing them to scale rapidly. And leading on from my previous point on growing internationally, when we compare the company's percentage increase in subscriber numbers in Australia and New Zealand of around 21% and 13% to the rest of the world on the right, as you guys can see, you can see that the year-on-year growth is a massive 37% increase, which is a massive gain. And similarly, if you just look at the total subscribers in Australia and New Zealand, you can see that the number is 1.43 million. However, if you look on the right, you can see that UK, North America, and everyone else combined, you can see that this number is just over 1 mil only. So moving forward in the future, you can see just how massive the runway for growth is and how big this company could become when it eventually overtakes Australia in subscriber numbers. So if they can keep on penetrating these markets, Xero can bring some pretty stellar results moving forward as well, because if you really look at it, Australia and New Zealand are pretty small markets and the real growth is in the global expansion. Since small business is a huge priority for this company, we can see that most of the revenue was made up of core accounting at about 91%, the platform revenues was 6%, and Workflow Max and non-recurring was the smallest revenue items. And we saw the biggest growth in core accounting at 24% and platform revenues at 21%. And the other priority for the business is building for scale and innovation, as we previously saw, and throughout the period they've continued to hire people in the right positions to fill those areas. And one thing that I like about the company is that they have a very high score when it comes to ESG, which is environmental, social, and governance, meaning that their actions have a positive impact when it comes to sustainability. Alright guys, now let's have a look at the financials of this company, but before we do, if you found value so far, please leave a like and subscribe. It really helps out with the YouTube algorithm. Let's get into it. Starting off with the company's income statement as usual, we can see that the subscription revenue has increased by 70 million, and this is a 22% increase, and the total operating revenue has increased by around 21%. The gross profit, therefore, has increased by 21.6% as well, which are nice increases given that the company still has so much room for further growth. Having a quick glance at expenses, and I can say that the two main expenses that I can see on here are the sales and marketing and product design and development expenses. So sales and marketing is probably the most important one here out of this whole list, because given that Xero wants to keep on expanding into those international markets, they need to be able to successfully market their product and provide sales support as well, because it's very likely that a lot of potential customers haven't even heard about this company yet. After all guys, you could have the most amazing product in the world which could solve a lot of problems, but if you don't market it well and you can't get the word out, then you won't be able to expand on it. So from that point of view, it's pretty important that we talk about it. And similarly with the recent acquisitions, and given that Xero is providing software services, they need to keep on continually investing in their product design and development, and they need to keep on updating it regularly to bring on new additions, new updates, to make the experience better for the customers. And given the increase, we can see that they've been doing that. Looking at the balance sheet for this company, we can see a monumental increase in the cash balance because it's basically doubled, and on top of that, they're a profitable company as well, which means that this cash can be utilized in the future to make more strategic investments, like doing more acquisitions or having stake in other companies or other investment vehicles to further their mission. And looking at the current ratio for this company in this period, it is 8.7, which is pretty huge, and the current ratio previously was 6.18, so they're very liquid and they're ready to keep on growing. And looking at the cash flow statement for this company, we are basically seeing the same story. The receipts from customers has increased around 20% year on year, because it's gone up from 339 to 409, and the main cash inflow for the business has come from its actual operations, not financing or anything else, which is a good sign to see that the business is making money from its own accord, not from any external means. So what are my thoughts on the business? Let's talk about it. So given that Xero is part of the WAX stocks on the ASX, this makes it a pretty huge deal because it's one of the leading tech companies on the ASX, and that's for a good reason, because they have expanded internationally and the financials look pretty healthy in my opinion as well, given that they're profitable and they also have a lot of cash to make strategic investments, which already strengthens their position. Now I haven't bought into the stock just yet, but it does look pretty tempting given that the stock is currently on an uptrend. But for me to dive into it, I think I will wait for a pullback before diving into it. But what about you guys? Have you already bought into it? Let me know down in the comments. If you enjoyed this video, I've made a similar video about CRO, which is another interesting company that's looking to solve problems for businesses by helping them get paid quicker and on time. And this video is about IOU Pay, which is another exciting stock on the ASX. Thanks for watching guys. Please like and subscribe, and I'll see you in the next one. Bye now. So sales and marketing is probably the most expensive.